Good morning, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with the August 21st stock market wrap for you to use today. Actually, it's from the 20th, but it's the 21st today, so go ahead and use it. First of all, yesterday what happened was that the markets put in a nice 1% gain on the NASDAQ, lagged behind the S&P 500. But as you can see with the resistance and support lines that I have here, we still have a market that's consolidating. That is fine with me. The longer it does that, and as long as we see the green bars taller than the red bars in the base, even if it is below the 50-day volume average, that'll be good for me. Now I want to see, now you can look down here, you can see the NASDAQ is lagging on a relative strength basis. So let's see if the New York Stock Exchange is seeing that strength. No, it's not. It is also consolidating, and what you can show here is basically that is going to be resistance, and this is a support area right around here. So the NYSE, just like the NASDAQ right now, is under a little bit of a consolidation phase. So it's not bullish or bearish. But since we're coming from a previous uptrend, it still should be bullish overall for the market. Now let's look at the S&P 500, which is actually becoming the leader. And as you can see, it hit a new high, so we can't necessarily go use this because it would be cutting above it. But here recently, in the very short term, we do have support and resistance lines pretty well drawn in the sand here. And it'll see what happens whenever prices get either above this resistance level or below the support level to see where the market's going. Now here on the 500, actually, you can actually see some distribution days. Some big, tall red bars, smaller green bars. The S&P 600 is also in the same similar situation that every other index is in, and that's a consolidation phase, and we can show that right by doing this, showing that, and then showing this. So once again, another market under consolidation. And then we have the mid-cap 400, which is also very important. And once again, we have an area of consolidation right here and then right there. I got to bring it up just a little bit for the lows. So everything's in the consolidation area. It doesn't matter if it's the NYSE, the NASDAQ, or the S&P 600. They are all in the same situation. Now, the only one bad hint that we have out there that this rally, whenever it ends, could be ugly is here with the leading stock market indexes. Now, this is a weekly chart, and actually what I want to do is I'm going to print this screen, go to Paint, and post it on here, and then just do this really quick. So you can see that the prices are going up. Do you see how prices are going up here? Where I'm drawing them recently. And look at the relative strength line. Look how it's going down, down, down. All the while, price is going up. So that is negative divergence, and that is very bad because this relative strength line should be moving up. And if the IBD 8585 was only moving up like this, the market better be moving sideways, and that would have the relative strength line up. However, with the way that the market's moving up, the IBD 8585 should probably be around 260, 240 by now, honestly, if it was acting exactly like it should be. Now, let's take a look at the IBD 100 to show you the exact same similar situation. Excuse me. It's almost exactly identical. I'm going to put it on Paint so I can do the same thing again. Look at price. Price is moving up, 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 and all the while down, 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 down the relative strength line. Very ugly negative divergence, and even look at as it rolled over back here in 2008, whenever it started to get ugly. As you can see, as it rolled over, it didn't fall like the price did, which has started to show then some positive divergence right around here. Let me go, and I'm just going to box it like right here. You start to see a little bit of positive divergence in the relative strength right there to the price that was moving down. But once it got down here, and once we actually got a fall through day on the indexes and price started to rally, that's when the IBD index 100 started to go lower. So it's very, very clear on this chart, and it's very, very clear on the IBD 8585, which I'll be throwing up here, that leading stocks are showing negative divergence, and that should be bad for whenever this does end. I'm going to see how much time we've gone through. Only 5 minutes, and that is perfect. So now what I'm going to do is I'm going to show you the new longs that we have tonight, which are quite a few. We have DGW. It is a Chinese stock. As strong as it is bouncing off the support with the volume spike right there, look at the 2-day volume spike. Look at that. Look at that chart. Look at that intraday reversal. That's very, very beautiful intraday reversal, and it goes with the coincides the previous uptrend pattern, higher volume, and the downtrend of lower volume. This is a very pretty chart. It's $29 stock, so it's not cheap. It's Dongyan Global Water. Obviously, look here. That's right. This is only going out to subscribers, so I can show you. Look at the numbers right here. Look at the earnings. Look at the sales whenever it shows up. It's China. It's all good, baby. And then another new long, of course, is GOK. GOK is A-OK in my book because it's bouncing right off the 50-day moving average and breaking out to a new high. And look at how strong the volume is. The only sad problem is no max green BOP. And too bad BOP wasn't green the entire base. Oh my gosh, if it would have been. This $16 stock might be worth, you know, $50,000 to $100,000 in my account. I mean, it's that nice. TIXC, another very beautiful, full of green chart. I mean, this is just gorgeous. I love the way it looks. I love the price move today. The high of day close off by just 2 cents. This is just a beautiful, 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 beautiful chart pattern. However, without max green BOP every day, without a very strong, huge volume coming right off the 50-day moving average, it's hard to load up when it's a $3 stock. And as I'll show you, TIXC does have nice earnings and sales recently, but there isn't a whole line of huge growth without any backtracks to make me want to really fall in love with it. Plus, it's a California stock, so gosh, you know they're probably getting taxed to death. Then there's LOPE bouncing really close to the 50-day moving average. I already went ahead and tried to poke long this stock. Whoops. But I didn't sell all of it because it maintained the green BOP and still looked right. And here it is, bouncing pretty close to the support of the 50-day moving average. And it's just very pretty. It's very beautiful. There's nothing to dislike about this stock here. And if you don't believe me, take a look at the fundamentals right there. What's the earnings per share right there? Pretty darn good. And then the last one I'll show you first on the fundamentals, 99 EPS. Look at the EPS growth. Look at the sales growth. Look at the ROE, the debt, future estimates, and then look at the beautiful chart. But I have to warn you about one thing. While it's bouncing off the 50-day moving average with max green BOP and very strong volume, and a 3-day chart looks very good. Actually, a weekly chart looks kind of iffy, but the 3-day chart looks very good. 2-day looks even better. 1-day looks the best. I just don't understand this gap down. That was really weird, the gap down. But it held the 50. I didn't want to sell it because I still had gains from whenever I went long originally, which is back here. So they had me a 13% gain. But the bounce now is just very pretty, and it just has to be had. Now, well, let's go to the shorts. The only full cover is BDX. It's closing above the 200-day moving average. Look at it. Look at the strong volume the past 2 days. Strong volume, closing above the 200-day moving average. All this little consolidation area should have led to a downtrend. Instead, it got stuck up there. Now we have 2 new shorts. BKE breaking down right at the 50-day moving average through the 200-day moving average. You can see it really clear whenever I put it on Zoom 3. And whenever I go out way far out in a Zoom 1 on a 2-day, you can really see how ugly it's getting. And being that zoomed out on a 2-day, let's look at TWGP. That's pretty ugly, and you can see the big, tall red volume bars. And on a daily, you can see today's breakdown is quite clear. So TWGP is a new short, and so is BKE with that reversal right up there at the 50 through the 200-day moving average. Then we only had partial sells. BZ, I want to take profits. DAN, 224% gain. I want to take profits. SNS not going up immediately. It has a big down day on heavy volume. Want to go ahead and sell some of it. CAR, we now have a 101% gain on it. It's getting a little crazy. There it is on arithmetic. You can see that it's getting a little, beyond where it's probably safe to want to just keep holding all of it. VSCP, it can't go up immediately, so we're going to go ahead and get rid of some of it. Still, I want to show you that we're leaving with a small gain, so that's not going to be a loss for us. CLRT, we've been long since back here. We're not selling all of it.